DeFi is short for decentralized finance, an umbrella term for a variety of financial applications in cryptocurrency or blockchain geared towards completely changing the way our current financial system works. In this video, I'm going to break DeFi down for you in very simple terms and explain the real world changes we're probably going to be seeing in the next few years. Decentralized finance, or DeFi, is a financial system that operates independently from centralized financial intermediaries like banks, credit unions, or insurance funds. Instead, users have the ability to transfer, trade, invest, and transact peer-to-peer using cryptocurrencies and digital assets through smart contracts, eliminating the need for these slow and costly intermediaries. And you can think of smart contracts as real-world paper contracts, but without the need of a third party to enforce the contract. For example, if you wanted to fund a project on Kickstarter and your goal was to raise $10,000, then one of two things can happen. You either raise $10,000 and Kickstarter will release the funds, or you raise less than $10,000 and then Kickstarter should give back the funds to the original donators and you get nothing. But in both scenarios, it's the responsibility of Kickstarter to manage the funds fairly. A smart contract would automate this entire process so that all that money isn't completely in the hands of Kickstarter. Once your goal of $10,000 is raised, the smart contract will automatically transfer the funds to you, and if less than $10,000 was raised, the smart contract will automatically give the funds back to the original donators. And this is the basis of what a decentralized financial system is working towards. Essentially, it aims to get rid of the middleman, and in many cases that would be the bank, so that individuals can send and receive money directly between each other in a safe way without a central bank making the process inefficient and more costly. So for example, Bitcoin is a form of money that isn't controlled by any central bank or government. It can be transferred to anyone from anyone around the world without the need of a bank or a financial institution. Bitcoin is decentralized money. However, a financial system is more than just transferring money. There are a variety of services we use today. So for example, loans, saving plans, insurance, and stock markets are all services that are built around money and together create our financial system. Today, our financial system and all its services are completely centralized. Banks, stock markets, insurance companies, and other financial institutions all have someone in charge, whether it be a company or a person that controls and offers these services. So for example, if I want to send money to a friend through bank transfer, the money first gets sent to the bank and then the bank distributes the money to my friend. So in this example, the bank controls what can or can't be sent. This centralized financial system, or CeFi for short, has its risks: mismanagement, fraud, and corruption, just to name a few. But what if we could decentralize the financial system as a whole in the same way Bitcoin decentralized money? That's exactly what DeFi is all about. Using decentralized money like certain cryptocurrencies that can also be programmed for automated activities, we can build exchanges, lending services, insurance companies, and other organizations that don't have any owners and aren't controlled by anyone. Okay, so let's break this down. Infrastructure. In order to create a decentralized financial system, the first thing we need is an infrastructure for programming and running decentralized services. Luckily for us, Ethereum does just that. Ethereum is kind of a do-it-yourself platform for writing decentralized programs, also known as decentralized apps, or dApps. Through the use of Ethereum, we can write automated code, also known as smart contracts, that manage any financial service we'd like to create in a decentralized manner. And this means that we determine the rules as to how a certain service will work, and once we deploy those rules on the Ethereum network, we no longer have control over them. They are immutable, meaning that we can't change them. Once we have a system in place like Ethereum for creating decentralized apps, we can start building our decentralized financial system, stablecoins. The first thing any financial system needs is, of course, money. Now you may say, but Ethereum is a form of money, is it not? And that is true, but for a decentralized system to work, we need a currency that is less volatile and has a direct connection to the real world. And that's where stablecoins come in. So stablecoins are cryptocurrencies that are pegged to the value of a real world asset, usually some major currency like the US dollar. Think about it like this. When you want to receive a stablecoin, you hand in $1 and you receive a brand new stablecoin. Once you want your dollar back, you hand in your stablecoin, it gets burned, and you get your old dollar back. You cannot only do this for dollars, but with any currency you want. Tether is one of the more well-known stablecoins, and it's called a stablecoin because it was originally certainly designed to always be worth $1. You may well have heard of Tether before, which trades under the symbol of USDT. At the end of 2021, it was the 5th largest cryptocurrency by market capitalization, worth more than $68 billion. In essence, a stablecoin is actually also a smart contract that resides on the Ethereum platform, and this makes stablecoins decentralized so they cannot be shut down nor censored, hence it's a suitable form of money for other DeFi services, DEXs. After a decentralized financial system has stable decentralized money, more services can then be added. And the first use case that we'll discuss is the decentralized exchange, also known as a DEX. So a DEX is a peer-to-peer marketplace where transactions occur directly between buyer and seller. The main idea here being that it helps facilitate financial transactions without the need for central banks, brokers, or any other kind of intermediaries. Many popular DEXs like Uniswap and SushiSwap run on the Ethereum platform, which means that they operate without a central authority. When you trade on a DEX, there is no exchange operator, no sign up, no identity verification, and no withdrawal fees. Instead, the smart contract enforces the rules, executes trades, and securely handles funds when necessary. Also, unlike a centralized exchange, there's no need to deposit funds in an exchange account before conducting a trade. You keep your crypto in your own wallet, and this eliminates the major risk of exchange hacking, which exists for all centralized exchanges. On the flip side though, if you lose your password, for example, there is no customer service you can ask for a reset. But the range of DeFi services doesn't stop there. Let's move on to decentralized money markets, services that connect borrowers with lenders. Lending platforms. Lending platform Compound is an Ethereum-based borrowing and lending decentralized app, meaning that you can lend your crypto out and earn interest on it. Alternatively, maybe you need some money to do some kind of investment, but the only funds you have are cryptocurrencies and you want to hold them because you are sure that they will rise in value. If that's the case, you can deposit your crypto as collateral and borrow against it. The Compound platform will automatically connect the lenders with borrowers, enforce the terms of loans, and distribute the interest through smart contracts. And once your investment is complete, you can pay back your loan and you still have your cryptocurrency. The process of earning interest on cryptocurrencies has become extremely popular lately, giving rise to yield farming, a term given to the effort of making crypto assets available on such lending platforms. So we have decentralized stablecoins, decentralized exchanges, and decentralized money markets. All of these new financial products definitely entail some risks, which we'll cover shortly, so why not create a service that ensure our funds in case something goes wrong? And that's where decentralized insurance comes in. So decentralized insurance is a platform that connects people who are willing to pay for insurance with people who are willing to insure them for a premium, while everything happens autonomously without any insurance company or any agent in the middle. So smart contracts enforce the pre-agreed on policy, because although there is a whole load of benefits to DeFi, there are plenty of risks too. DeFi is still in its infancy, and this means that things can go wrong. So smart contracts have had issues in the past where people didn't define the rules for certain services correctly, and hackers found creative ways to exploit existing loopholes in order to steal money. It's really important to understand exactly how a product or service works before investing in it, so you can be aware of any issues that may come up. To sum it up, it seems that the DeFi revolution is at its early adopter stage, and the coming years will tell if it manages to cross the chasm into mainstream adoption. There's no doubt that a decentralized financial system can benefit a huge portion of the population that currently suffers from financial discrimination, high fees, and inefficiencies in managing their funds. Currently, there's a lot of hype around DeFi and crypto and blockchain technologies in general, and if you do want to take part, be sure to understand not only the rewards, but also the risks before getting started.